Good afternoon, everyone, and welcome to today's webinar. This is the Condominium Management Group's June webinar series, and our focus is on insurance. This is part 3 of 3, our final webinar for this series. The CMG webinar series is being offered exclusively to directors and the communities that we service. I am Shelley Seavey, the Resource Compliance Manager for CMG, and I'm pleased to be your moderator for this session. This webinar series is not intended to provide you with opinions that would protect you under Section 37 of the Condominium Act. If you are a director and want to use the protection of Section 37 of the Condo Act, you need to get an opinion about your specific fact situation from your professionals. In addition, the information provided in this webinar is current as of today's date, June 16th. As things are changing rapidly, the information provided today may not be relevant at a future date. Also, please be advised that references to the Condominium Act or other legislation are references to the Ontario legislation. It is more important than ever that condos rely on their professionals for advice during these challenging times. So without further ado, I'd like to introduce our guests today. We have Tom Gallinger. Tom is the Vice President of Atrens-Counsel Insurance Brokers. Atrens-Counsel specializes in managing insurance programs for condominiums, unit owners, and property management professionals. Tom has been in the insurance industry for over 16 years in various underwriting, brokering, and management roles. As a specialist in condominium insurance, Tom strives to deliver a high level of service by managing the long-term insurance needs of his clients. Welcome, Tom.
Thank you.
Next, we have Cliff Gethings. Cliff is a founding partner of 7 Building Services. His 30 years of expertise includes project oversight ranging from minor repair work to large-scale disaster recovery in both occupied and unoccupied spaces. Cliff specializes in emergency response, fire restoration, biohazard abatement, designated substance remediation, catastrophic rebuild, and various others. Working in multiple sensitive, specialized environments has honed Cliff's passion for integrity, for treating clientele with respect, whether or not on minor repairs or extensive rebuild. He is an expert at careful oversight, accurate planning, and budget management, and client engagement. Welcome, Cliff.
Thank you very much for having me.
And welcome both to Tom and Cliff this afternoon for joining our discussion for part 3 of the webinar. So let's jump right in. Now, each policy covers the basics. Each policy should cover the basics according to the Condominium Act. So Tom, over to you. Can you explain briefly what the basics would be for a condominium corporation to consider?
For sure. Yeah, there's essentially the Condominium Act, as you said, drives everything that's required in a condo, including what you're required to carry from an insurance standpoint. So there's 4 mandatory coverages that every condominium has to carry, whether you be a high-rise corporation, a townhome corporation, or otherwise. Every corporation must carry these 4 mandatory types. The first one is property insurance. And that probably amounts for about 80% of claims from what we experience that corporations submit onto their policy, all tend to fall under the property section of the policy. What they've got to insure there is really all property originally called for by the builder when the building was built, builder specifications. If you can imagine every brick, every block, every pane of glass, all the structural elements of the condominium, all of the common elements. And then the condominium is also responsible to ensure that basic level of finishes inside each unit described by the standard unit bylaws. So that's the property section of the insurance. That's mandatory and probably the most important, usually the biggest focus of condominium corporations. Corporations are also responsible, whether you be high-rise or townhome style, to ensure what's called equipment breakdown, or sometimes shown on the policy as boiler and machinery coverage. That's required as well by the Act, and basically that covers any sudden and accidental breakdown of electrical, mechanical, or pressurized equipment the corporation may have. It also would cover if there was damage to the building from an explosion of any of that equipment. And although that's typically relatively rare in a condominium, it is a slight exposure that all condominiums would have, and something that they're required to insure under either called boiler and machinery or equipment breakdown section of the policy. Corporations, then, that's two. The third one, and probably the next most frequent used area of an insurance policy, is the comprehensive general liability. And that covers the corporation, protects the corporation from legal liability stemming from the common elements or the operations of the condo. And really, what you think of there, and what we see the most of, is slip and fall incidents. So really any bodily injury or property damage incident that occurs on the property, if the corporation gets sued or the potential of a lawsuit against the corporation, that's where your general liability section of the policy would kick in, would help defend the corporation, would investigate the situation, and would also have the potential to pay any compensatory damages if a person or their property was injured or damaged due to one of those events. If it was deemed there was some negligence on the part of the corporation. So that's a very important section of the policy as well. And when winter time comes around, they happen in the summer as well, we tend to see more of that slip and fall stuff on ice on the corporation property. So that's the third one. And the fourth one, which is probably near and dear to most of the directors' hearts, is the directors and officers liability coverage, which is also mandatory and actually brought out in section 38 and 39 of the Condominium Act. Directors and officers liability really protects them from allegations of financial loss against either the corporations or the directors for decisions that they've made or acts that they've made as directors. Those are really the four main ones. There's a bunch of other coverages which we won't get into today because of timing. Those are the four key ones that every single condominium's got to make sure they have in their policy.
Okay, thank you, Tom. So if I am in a townhouse community, let's say a two-story townhouse community, not a high rise, several units, perhaps 78 or 80 units, several buildings, does the coverage, basic coverage, vary depending on whether I'm in a high rise or a townhouse community?
Well, the coverage that you need to carry in both of those styles of communities, really the coverage basics are the same. You still have to have those four mandatory coverages. What may differ is the limits of insurance that you carry for those coverages, and also the pricing that's attached to those coverages. So for example, equipment breakdown or boiler and machinery coverage for a townhome site is typically very, very inexpensive because the exposure is very slight, although it still is a mandatory coverage that you must carry. Whereas in a high rise where you've got more equipment like elevators, chiller units, HVAC systems, life safety systems, your premium that you contribute, the portion that goes towards that coverage would be more in that type of a setting. And likewise, the pricing is differentiated from the insurance companies depending on what type of condo you are. So a high-rise corporation that maybe has more exposure to water damage incidents and people flooding into other people's units or causing that kind of damage, they might have higher water damage deductibles. They might pay a higher price for that component. Whereas townhome style or brick veneer frame, wood frame construction style properties, they may pay a higher price because there's more exposure to them, or the insurance companies believe there's more exposure for severity. And that being, if a fire catches, you can have $1 million, a $3 million, a $5 million loss of assets of the corporation, which the insurer may have to respond to. So some of the pricing that they charge for those style corporations would be based on some of those.
Okay, interesting. So if you are a director, are there any ways that you could advise how to control the increase of their premiums?
Yeah, that's a really good question, and one that's come up quite a bit because of what people have seen in the marketplace. There has been a lot of change, as I'm sure, if most of you have joined some of the previous sessions that CMG has held on insurance. talking about how rates, where rates have gone in the industry, where deductibles have gone, and some of the change that we've observed in the marketplace. One of the discussions that I think is important to have as a condominium is, how does the corporation make itself best in class in the eyes of the insurance company, and that's really the best way to ensure that even if prices rise, they typically rise for everybody. But those who have claims or other factors that make them less desirable to the insurers, when the prices rise, their prices rise further. So how can you stay at this level? And that's really by being best in class as a corporation. So doing everything you can never completely avoid a claim situation. That's why you buy insurance, but lower the likelihood of that situation. And so those could be things like having a well set up standard unit bylaw. We normally recommend removing flooring from the bylaw because that's a big driver of loss costs. So that minimizes your chance of having to submit a claim if flooring is not included in your standard unit bylaw. Corporations securing regular replacement cost appraisals. If you don't have a replacement cost appraisal, the insurance company usually adds an inflationary factor to the value of your property. And normally it's a little bit heavy. It's sort of a broad brush and not specific to your site. So a replacement cost appraisal will make sure you're not over insuring the value of the building. You've got a very accurate insurable value, and that you're paying based on that, and you're not getting falling to the whim of those 5% building value increases occurring year over year. Another thing is which fortunately all of the participants on today have is professional management, because professional management is going to have the ability to really hone in on areas that will ensure sort of those proactive preventative areas that will ensure the corporation has lower likelihood of suffering a claim in the future. So if the building is older, or the water tanks are older in a townhome style building, and maybe they're elevated, they're on an upper floor and they could cause damage, communicating with the owners about the responsibility to replace those, or working with the owners, as we saw in the past, replacing faulty toilets. If we've got toilets that have passed their lifetime, or seals or connectors, and really working with the owners and working with the corporation common elements to make sure that things are on track and things are up to date. Because if you push those maintenance items down the road, that increases the likelihood that you'll suffer insurance claims. And then that's going to put you in sort of that, the higher hand there. Your rates and your deductibles are going to be pushed further on. So those are a couple of strategies that corporations can use, and also talking to your broker about, do they have any other ideas that are unique or specific to your particular corporation?
Well, we lots of good information. We are going to change avenues a bit and flip this over to Cliff. So Cliff, your expertise is disaster recovery, managing damages arising from fire, flood, or a natural occurrence, and dare we say something like a tornado. Why is emergency response so important to mitigate damages and a timely restoration as well?
I think for this case, we'll use non-specific buildings or whatnot, and we'll use water as a common loss, because most people have suffered water damage in one way or another. The best thing to do in any case when water's in, you have to shut your source off, make sure everything's taken care of to limit the amount of damage. Sometimes it takes a while depending on the building, sometimes it can be done quickly. Second source is obviously to try and clean up as much as you can, as quick as you can, but at the same time contacting your broker and everybody else, depending on the severity of the flood or how big of an area is covered. The biggest reason for that is once it's taken away from there and the source is stopped, it limits that migration of water through the home. The unfortunate part is when you clean it up yourself without contacting a professional to get it done, water could be in different areas that you would never suspect or expect to see there. Once you have the contractor come in, and there are many contractors who do this and are well versed at it, they'll have an eye and they'll have the knowledge as to where it's been or where it generally will flow through. They'll bring equipment to take measurements, bring equipment to go dry everything out and do what you can. The hardest point is, or problem would be, is if you don't mitigate the water quick enough and you don't put in drying equipment, whatnot, it leaches through. And then after the fact, you may find spores or growth behind items. and whatnot. So the problem with growths and whatnot is while they're wet, they still grow. Once it dries, it lays dormant, but never disappears. So the response time is mandatory to get everything cleaned up and in the process of drying. The only problem we have with this is generally with buildings, you need to know what the materials are that make up that building. Because there are certain contents and certain items in a building that contain materials that ACMs that need to be dealt with in a specific way. But as long as everything is clean and mitigated and at least started mitigation immediately, it should limit the amount of damage.
So Cliff, in your experience then, if I don't have an emergency that's happened, but I would like to make sure that all of my documentation is touch my fingers so that I could provide it to the contractor that the preferred contractor that will be calling in the case of emergency. Are there any documents that you would recommend that the directors or managers collect or attain prior to an event occurring?
The biggest one really would be a DSS report, a DSR report. With the designated substance survey, it'll help minimize the amount of time it takes in order to remove materials and whatnot. If you have walls that you're unaware of, by law, you're supposed to treat them as asbestos containing if you don't know the timeline when the structure was completed. So with that said, as long as there's a DSR, they'll know how to treat it, how to deal with it immediately. During an emergency call, most times are after hours, people don't have the ability to grab paperwork, everything else. And question would be, is it an insurance claim? Is it a private claim? But nonetheless, people will show up to help almost immediately.
And a DSR or a DSS report, is this something that you would normally only, like, you're saying that this is a document that you could attain in advance. So what would be the age of the property? Let's say a property that was built before what date?
I would say anything pre-1980, it's required to have a DSS or DSR, but materials were used after that point that's still contained in pipe wraps and various different things. So it's better to have the survey done, and that way you know your building's clear, you know there's no issues, and if there are, they can be addressed without any further delay.
Okay, and as far as asbestos then, where typically do you find asbestos in you had mentioned briefly building wrap, but where else would it be?
On pipe wrap, it's very common, but in drywall compound. Ceiling texture, and the reason for the DSR is it'll tell you if it's friable or non-friable. That means we can decide whether you treat it as type 1, type 2, type 3. Depending on the concentration, the square footage area that needs to be addressed or removed, and we can come up with a plan to deal with it that way.
Okay,
And
so
just to jump in on asbestos as well, and why this is a great point and very important for directors and managers to understand, especially in these older properties, is that pretty much all insurance policies out there under the general liability section, they don't provide coverage for corporations. If you get sued by somebody alleging that you've caused asbestos to get into the air and asbestos particles have ingested them, or it's caused them some sort of bodily harm, pretty much every policy out there, it's a standard exclusion is liability due to asbestos. So if if these sites can make sure that they take those proper precautions, which allow the contractor to then do that as well, you'll avoid any potential pitfalls which could come about from it. If those, if the contractor is not aware of that, not made, aware of that, and then those particles get into the air and somebody does come after the corporation because of that.
good point. Yeah, very important to keep that in mind. So as far as the steps then required for addressing the repair, you had, Cliff, you touched on, so stop basically the flow of the water or the source of how the damages are happening. So that's the first step. Try to provide the services to mitigate further damages. From there, where do they go from there? Do you start to complete repairs, contact the broker, or I'll ask either Cliff, go ahead.
So in that case, once the mitigation started and things are being tidied up and cleaned up, dried up, depending on the severity of the water damage, whether it's just a toilet that's overflowed and taken just to the bathroom, generally someone will take care of it there. But if it's a multi-story building where water's gone through many floors, there's all kinds of nuances to it, because it'll go through double layers of drywall, it'll go through, run down different channels, it'll find places to go where you would need to be a professional to come and scope out and understand where it is and to be able to track it and remove it properly. I'd like to go back to the asbestos part just for one moment, as Tom was discussing. The thing with asbestos, yeah, it comes across as something, and it is a horrible thing, but in its state where it's in your drywall, your compound, the only time it's really truly an issue is once it's disturbed or made airborne. Many buildings, many homes contain asbestos throughout, which isn't an issue until you disturb it. Once you disturb it, then it has to be abated by a professional.
Okay, good point. And then, Tom, at what point then do we involve an insurance broker, or would it be making a claim only?
Well, not necessarily. I mean, again, the first call should definitely be to, a contractor, a supplier that can provide those emergency services, because in your insurance policy, in the corporation's policy, and in every unit owner's policy, everyone has an obligation to mitigate further damage. So basically, really to stabilize the scene, because if you let stuff, as Cliff says, infiltrate further or get away, then it's going to create more problems. So the one thing we always recommend as a broker that specializes in this is make sure, if you've got a loss incident or damage to property that could possibly become an insurance claim, you may not be sure at the outset. It's always important to bring in an emergency vendor that is pre-approved by the insurance company, because they're going to know what level of tolerance for costing and pricing and fans and dehumidifiers and remediation action that the insurance companies are going to be comfortable with. They're not going to overdo that. And so if you do have to submit a claim, because you've done those things before you've even involved the policy, that contractor is going to do the work to the specification. If it becomes a claim, then you're going to be able to have coverage for those costs under the policy. Getting back to, then, do you call your broker? Certainly, if you're dealing with an independent insurance broker, so again, somebody like us who deal with multiple insurance companies, certainly call that broker, because if you call us for advice, it doesn't mean it's a claim. So management or somebody from the board, whoever's handling the matter, is certainly more than welcome to call their independent broker and look for that advice. What are our next steps? We've got an emergency vendor that's done this right now. You're not sure about what the costs are going to be. What do you recommend? Because what a broker is going to be able to do, you're going to be able to look at the detail and the history on your file. Have you had a couple of claims in the last few years? What is your deductible level? What do we estimate the damage is going to be? And then they're going to be able to provide their advice to say, hey, you know what? You're only looking at $5,000 or $10,000 above your deductible. It might not be worthwhile to submit a claim to your policy, because these are the potential, pitfalls we could foresee if you do that. Again, the board of directors, acting on behalf of the corporation, they can always submit a claim as long as it is over and above their deductible. They have the right to do that. But your broker, as that independent third party, is going to be able to say, hey, this is my advice. And that'll just sort of help the board make that decision. If they do decide, and I mean, our normal recommendation in a market like this is 2 to 3 times your deductible is worthwhile considering submitting a claim. But again, it depends what type of claims activity have you had in the past, and what problems could that present if you do submit the claim in the future. If you do submit a claim, then your broker is going to contact the insurance adjuster, and then the process is really going to be taken over by them. And they're going to bring in, obviously in coordination with management and any on-site staff, if need be, they're going to bring in the contractors, they're going to coordinate the bids, and they're going to undertake that process. And as I believe was discussed in a couple of previous sessions, there is an opportunity now as well to involve an insurance adjuster, even if you're not actually making a claim. So they can still complete that process and support, management and the board in going through that process to make sure the corporation is only paying what they're responsible for by virtue of the act and your declarations and your standard unit bylaw. But you don't actually have to submit a claim and impact the claims record of your policy. So with deductibles rising, that's becoming a more popular option to have that adjuster support the process, but actually to pay it out of the corporation's operating or reserve fund account if they don't want to jeopardize the policy.
That's a good point. Yeah, there are options on how to deal with it if you don't want to make a claim. There is a question, and maybe I'll throw it over to Cliff. So if you are called in to complete repairs for a condominium corporation, in the case that it's let's say it's a claim, are you working for the corporation? Who do you report to? Do you report to the board of directors of the condominium corporation, or are you working directly with just to the adjuster, or how does that work?
Generally, we deal with the adjuster, but once again, it's the board, it's the building who we're working for. So the people who have to be happy at the end of it is the board. If it's a big enough claim where they need us to come visit, go through, discuss, they'll go through the adjuster as well as ourselves, just to make sure they're getting everything they need and to make sure it's finished the way they need.
Okay, thank you. And Christina also has a question. Are there any special insurance considerations when a condominium corporation shares repair maintenance costs with another corporation? This is something that you definitely will have to, and Tom, feel free to jump in if you'd like as well, but lean on your property manager because you'll have to definitely review your governing documents to see how your insurance coverage will cover the common elements of your corporation and any neighboring or shared services as well.
Yeah, definitely. And I mean, this is something that I think, from what we've seen, especially newer developments, is becoming more and more common is shared agreements. Whether it be a shared facilities agreement with another corporation where, say that the classic style, you got two corporations and a rec center in between, and they both share the, responsibility for that rec center 50-50. You see all sorts of new stuff now, even sharing with commercial entities and commercial component owners, sharing with the city, all sorts of stuff. So it's important to look at that agreement. What we normally recommend is setting up a separate policy for that shared property that's governed by the shared agreement. Because then if you have a loss to that property, instead of making two claims, one claim for 50% of the damage to Corporation A and one claim for 50% of the damage to Corporation B, you actually just make one claim onto that shared policy. It keeps the claims off of the tower policies or corporation policies, if you will, depending on the style, and allows those corporations, again, to enjoy that more favorable rating. And just isolates or, sort of offsets that claims history just to the shared policy. So that's something you may want to discuss with your broker if you do have a shared agreement, like I think what was being referenced by Christina there.
Excellent. That is definitely a good point. And there's more and more communities that are being faced with managing a shared component. So it's definitely a good point. We have, so I'm going to go back to the case of damages. So the damages are, let's say, again, back to the water infiltration, but it's not too obvious. It's happening over a period of time. And perhaps it's happening behind a wall. It's a slow leak. And dare we say that M word, mold, but there's growth behind the wall. We don't know the extent of it. And so, Cliff, you had mentioned that until it's disturbed, then it's not really impacted yet. It doesn't impact the occupant yet.
So that going to mold, which is different than asbestos. Mold growth only grows when there's moisture. It has to have the right environment in order for it to grow. Otherwise, it will lie dormant, and it will lie dormant forever if it doesn't get wet again. But the minute reaches the right moisture content, heat levels, everything else, it will definitely grow again. As the only way or the best things to get rid of mold is to cut it out and remove it, which can't always be done. And easy things like drywall and stuff like that, it is easy to remove it, dispose of it, and get rid of it. But in structural framing, everything else, where it's not so easy just to cut it out and take it out of a home, then the proper abatement of treating the surfaces, removing what you can, HEPA evacting and encapsulating the area will leave it safe for everybody else around. But mold can lie dormant literally forever.
So it doesn't actually die. It
No.
lies, it stays dormant, so it's there.
That's correct.
It just has to be moistened. Let's say.
But as you brought up earlier, you do go to places where you can live in your townhome, and I'll use a townhome as an example, and been there for 15 years and never really saw anything until one day your wall became soft. You leaned on it and you realize that there's a crack in the foundation, just slight enough to let stuff through, and the whole back of all the drywall has continually grown and grown and grown and grown until it gets to the point where you actually starts making it through the surface. And that is something that happens not often, but now and again. But as far as coverage goes, I'd leave that up to Tom.
So that would be a major repair or
Yes.
replacement. Tom, how about a claim on this one?
Well, and that's the tricky thing when it comes to mold. I mean, insurance is designed to be coverage for sudden and accidental events that occur. So a pipe bursts and causes resultant damage to property. Somebody leaves a pot on the stove or a candle unattended and a fire ensues, which causes resultant damage. Mold often doesn't fit into that box. So for the most part, mold is typically not, because it's something that occurs over time due to moisture, humidity, or certain conditions inside the property. Mold is generally not insurable from a property standpoint. Now, there have been situations where, again, depending on the setup of the policy, I know I've seen under our policy, if you have mold that develops from a sudden and accidental event like a pipe burst, and by the time they were able to remediate that section, some mold had grown, that's normally insurable. And I know it is under the policy that we typically secure for condominiums, but generally that mold growth that we're all thinking about that happens over time, and all of a sudden you lean on the wall and realize that normally falls under the repair and maintenance section of your declarations and would not be an insurable event. So something very important to be on the lookout from a preventative standpoint.
Okay, interesting. I'm going to jump back. We have a question in the Q&A from Ted. So if a contractor reports to the board, does the board have the final say in the selection? So I guess this would be in the case of a claim being made, and you have the involvement of an insurance adjuster, a contractor is brought in. Does the board have any say as to who that contractor is going to be?
Yeah, I mean, the board, when it's turned over to insurance, again, the insurance companies, because they're paying the bill, they have a lot more involvement than if you're not submitting a claim. There is still some opportunity for the board to ensure that, within sort of a defined box of what the insurance company requires, they have some ability to, to be involved in the selection of the contractor. The insurance company has two key things which they want to keep in mind. Number one, their ultimate cost that they're going to pay, because they're not going to pay for a contractor that is double just because the board really wants them. And then number two, they want to make sure that the work is done to a certain quality standard that's required. So they're going to make sure that they're selecting a contractor that has the qualifications to do that. So provided those boxes are ticked, and again, it meets the approval of the insurer, the board certainly can have some involvement if they choose to in that process. But again, the insurer ultimately does have the final say because they're going to be paying the bill on that.
All right, thank you, Tom. We do have, oh, I see another question in the Q&A. Oh, shared facilities, absolutely. Just a suggestion for the next session. That's always a topic, that's for sure. I'm just going to touch on the topic of deductibles. So in the case that the renewal is coming up, what is your recommendation, Tom, as for reviewing your policy and deductibles at the time and what to consider?
Yeah, I mean, what we've seen with the shift in the marketplace, we have seen deductibles, minimum deductibles that insurance companies would like to have on policies have gone up from what they've been in the past. So this is maybe less of a decision point for most corporations, because normally the minimum deductibles available, say for example, for a high rise, I think the minimum deductible now is typically $25,000 for water damage. Most corporations don't really like to go higher than that. But if you do have a deductible setup that is lower, again, $10,000, $25,000 deductibles, in my view, if you want to be at this level in the best in class of corporations, those are the best managing deductibles, because what that proves to the insurance companies out there is that you're willing to bear some of the risk of some of those frequent or smaller events that might occur on the property. And you're less likely to have a frequency of claims. So those tend to be the best managing deductibles. That's normally what we recommend. So looking at your deductible schedule and maybe not trying to secure the lowest deductible, but really the best managing deductible. And the other feature of a deductible that you have as a corporation is under the Act 105 subsection 2, is you've got the ability to charge back up to the amount of your insurance deductible to a unit owner whose act or omission causes damage to corporation property. So that deductible, instead of being paid by the corporation, if it originates from a unit due to a unit owner's act or omission, you can usually allocate up to that deductible to the owner. So it's a way for the corporation to minimize their overall common expense towards insurance and allocate that deductible to owners. Typically $10,000 and $25,000 deductibles are readily available that owners can then go and insure for that deductible chargeback amount on their own unit owner's policy. So it really, as an entire ecosystem of the corporation, with the corporation policy and all the unit owner policies, it's the best setup in my view to really sort of minimize costs all around and transfer some of the risk of that mandatory corporation policy, which could be exposed in the case of 80, 100, 200, 300 unit owners to multiple different situations. You can sort of transfer some of that risk to those individual policies or those individual owners, which may suffer losses. So when looking at deductibles, that is a very key thing, making sure there's open communication with the owners about what those deductible amounts are, so they can properly set up their own unit owners policy.
Thank you, Tom. Lots to consider and how to look at it, as you said, as a whole system between the owner's policies and the corporation's policies. So we're going to come close to wrapping this up today. And let's close it off by a few key takeaways. So I'll start. One of the ones that Tom had mentioned that was an interesting point that I hadn't considered, perhaps some of the directors that are on the call on this webinar today had considered, but having a separate policy for your joint or shared component. And that alleviates having to make two separate claims, depending on where the damages are. So I think that is a great takeaway today. If you have let's see, Tom, I'm just looking at a question as well, which I'll go through in a second. But Tom, if you have a key takeaway from today as well, maybe I took yours.
No, that's a good one for sure. I mean, my thing is always, what we recommend, board of directors, ultimately, although they are running the affairs of the corporation in the best interest of all the owners, and they all have their own unique areas of specialty and expertise and backgrounds, they are essentially laypersons, right? So my whole thing for corporations to help you stay best in class is involving the right professionals, from property management, which is key, which again, you all got a check mark so far, unless somebody snuck in that's not a CMG client. On the insurance side, legal professionals, restoration specialists that you have, those phone numbers you have on call, those relationships, engineering, involving the right professionals in that business. I mean, that gives you as a director protection under Section 37 of the Act, but also too, it just gives you that peace of mind that you have involved somebody that really does have good expertise in that area, and you're able to properly take their advice and really hopefully run the affairs of the corporation in the best way possible.
Thank you. And Cliff, what would be your key takeaway from today?
Well, the easiest one still is, under any sort of loss, fire, flood, whatnot, to act on it as quickly as possible. The longer it takes to get to it, the more damage it will do, whether it's seen or unseen. So as quick as you can start mitigating the loss before you contact your broker is the best thing you can do.
Excellent. Well, thank you very much, both Tom and Cliff, for joining us today. We'd also like to thank everyone for joining this 3-part webinar series. There will be a brief survey that will be emailed out to all attendees, and it's most appreciated if you could provide your comments or suggestions. Now, looking forward, we are planning a great webinar for July. The topic will be big projects, small projects, discussion on details of planning, executing, and funding options. Be sure to join us. The CMG team is proud and honored to serve the board of directors and your owners of your community. We thank you very much for joining us today, and have a great day.